everyone, and welcome back to ASX Market Watch. Thank you so much for joining me today. I'm looking at the All Ordinaries in Australia, the FTSE in Europe, and the Dow Jones in the Americas, just to see how related they are, and also to see if we were to believe that 3 out of 4 stocks will follow the overall market. Then if we know which way the index is heading, then we can possibly know where 3 out of 4 stocks will also be heading as well. And this is great knowledge to have. Now, this is something that was believed by William O'Neill. He's one of the market wizards out of Jack Schwager's Market Wizards books. If you haven't read them, I strongly recommend them. They're a fantastic read. But let's get into it. And again, thanks guys for joining me. It is really good to have you here. This one is the All Ordinaries in Australia. It's a daily chart, and we're just looking at, so each one of these bars is 1 day. Now, as you can see, this is a downtrend line. All it is a line on a chart. It's probably the most ridiculously simple tool that anyone could use. But again, it really is quite a powerful tool. Why is that? Because as you can see, it was crossed in July 2009, and look where the market headed after that. 6 months of pure bullish action, and it was just beautiful. After that time, the market has gone sideways for a further 6 months, and more recently, it's crossed its upward trend line, giving us a correction and a bit of a downward movement. So as you can see, the market has crossed below the uptrend line here, and that was in March to April 2010, only just recently, and the market has headed downwards since then. Now, all I've drawn in most recently is our downtrend line here now on a short-term basis. Here it is here. Now, as you can see, the market is still below that downtrend line. So what we'd want is the market to cross back above it for us to be in bullish territory again. At the moment, still in correction territory. So still in a downward market. And again, this stuff is so simple, guys. Anyone can do it. As I said last week, if we were to look at a little bit of forecasting, if we check out yearly cycles, now yearly cycles state that I think August to September are 2 of the weakest months out of the year, despite all the crashes being in October, as most of you will know about. However, August and September are actually the weakest months of the year, traditionally. Now, based on this, what we're seeing is in July, we're seeing a little bit of a spike upwards. The market may continue upwards from there, but also it may head downwards after that in August to September. Now, that will bring us, if we just enlarge this chart a little bit, there we go. Oh, there we go. So this will bring us to the end of our Elliott wave, hopefully. Now, Elliott wave states that we've got 5 waves up, so we've got, I won't draw them in, but you can definitely see them. You've got 1, 2, 3, 4, and then possibly 5. And now we've got our A, B, C correction. Now, the C part of that correction hasn't gone below the first leg. So all that means is that I believe it still has a fair way to run. So that's the All Ordinaries. So looking at the weakest months in September probably will be our low. After that, we'll have our strongest months from November to January, which are traditionally the strongest months. Now that could be the start of our new bull run. Again, that's just based on yearly market cycles. As John Murphy, if you want to learn more about that, John Murphy has the lowdown. He's fantastic. Grab his books. He is great. The next one is the Dow Jones. Now, what I have done is I've actually drawn in the Elliott wave on the Dow Jones. Very simple stuff. This again is a daily chart. We've got 1, 2, 3, 4, 5 waves upwards. Now, you don't really need to have any fancy knowledge about Elliott wave. You can go into it a bit more depth, but you don't have to. 5 waves up, 3 waves down. That's all we're looking at. And considering the length of these waves, they usually go for about 5 to 6 months. And what we've seen here at the moment is our first leg down, so maybe our A wave. We could expect a bounce, which would be our B wave up, and then finally our C wave down again. Now, that's only because this current market move, this little correction, hasn't gone for very long. It's only gone for about 3 months. The other waves have all gone for about 6 months. So we're only at about half the time. That's all I'm saying. So there's quite potentially, we'll have a little bit of a bullish run now. Everyone will start to get excited again, and then perhaps the market will tank again into our yearly lows, which traditionally, again, the weakest month being September. That is potentially where we could see the low, and then a bullish run from there. So I hope that helps on the Dow Jones, guys. The next one and last one is the FTSE. Now, I've got all sorts of stuff on this on the FTSE chart. But seriously, it's all just lines, and it's all just lines. You could pick up a ruler, you could draw it with a ruler. Easily done. As you can see, we've got our downtrend line crossed in April 2009, and that went for ages. We had a beautiful bull run. It went for a year, and now it crossed below it in May or late April 2010. So great bull gains, and all that was a very simple trend line. I really can't tell you guys enough how easy it is. And I mean, obviously, it's just a line in the chart. It's really not rocket science. Now, as you can see, we've got our downtrend line, and the FTSE is below this as well. If you were to look at it from an Elliott wave point of view, we've got 1, 2, 3, 4, 5, and then on the FTSE, we actually have our A, B, C, potentially, because the market has been moving quite smoothly, and the FTSE was ahead of the other markets before. Maybe the FTSE is ahead of the markets again, and it's already made its yearly low. So that's one way you could look at it. The other way you could look at it is that this is one leg, then we've got our other leg up, and then our last leg down, like the other markets, hopefully into its yearly low, maybe around September, which again is traditionally the weakest month of the year. So I hope that helps on the FTSE and on the Dow Jones and on the All Ordinaries. I mean, really, there's not a lot happening if you're a long-only investor at the moment. Just sit on the sidelines until the market turns around. I mean, there's no point in trying to pick where the bottom is. Some people try to do it. I don't do it personally, because the majority of your gains, you'll find, is, as Jesse Livermore says as well, he says that he made most of his money by sitting tight and just making money in the middle of all these gains. So as you can see, this little middle bit here, that's where the most money was to be made, not on the ends. So I hope that helps, guys. Really, there's so many market masters out there. You could study them all, but I love to throw in a few quotes of their wisdom and that sort of thing in the Market Watchers, just to give you a little tidbit of what they have to say, because really, they're the ones that I learned from as well. So guys, thanks so much for joining me today. I must say, it's great to be able to chat about the markets. It is such a good pastime to have. And really, it says a lot about you that you're willing to go out there and learn something and sort of further yourself as well. I really respect that. So hopefully I'll see you next week. Until then, happy trending. Alright guys, bye for now.